Okay, guys, so once upon a time, there's going to be a trade that is just so difficult and crazy not to take. So what do? You take a trade like this ahead of the earnings report. It is highly dangerous to take trades ahead of the earnings report, but there's just moments where you absolutely just grab your balls and you fucking do it. So Workday, WDAY is the ticker symbol. This is the chart, okay? Everything's lined up. A ton of divergences here on the charts, guys. So after the gap down, we have a variation of a tornado pattern. Bounce 1, bounce 2, bounce 3, bounce 4, just under the top line of the prior bigger size bounce. So from here, I mean, how low can we go? I mean, we can drop anywhere from 10, 20, 30 bucks here. I mean, it wouldn't be shocking if maybe we even broke the 200 level, but clearly 200 would be the first target, maybe 200, 205, going maybe potentially by end of tomorrow to maybe even touching 190 or 180 by Monday. So, I mean, some of these trades are easy, if you understand the levels and the charts. And overall, if you look at the broader pattern here, this is a variation of a head and shoulder. When the stock hits all these crazy levels right here of around 290, 300, 310, it happens on like non-existent volume. Basically, there's no volume, nobody's buying it at this level. And oftentimes, it's a major characteristic of a much grander head and shoulder formation. And this shoulder, if we're to consider it as a shoulder and view it as a shoulder, it's been built out now for long enough to where there could be a sizable move. So opposed to thinking what the market is thinking, okay, which the market thinks, hey, there's not going to be a whole lot of action here. Okay, maybe we can drop 10, 15 points here. I think a much better view is to consider this thing repeating one more time what it has done. And this would be a lot of stocks would do it 3 times in a row if the second pattern is confirmed. So we got a gap down right here, another major gap down right here, and it wouldn't be a shocker if we got one more gap down to a key level. And of course, some of these levels we haven't seen in a long time. So let's go ahead. This is a 1-year chart. I mean, let's go to like a 2-year chart. This is a very well-defined level at 200. So wouldn't be shocking if we dropped to 200, maybe then bounced to 210, and maybe potentially ended up somewhere next week at like 190, possibly even 180 area. So this could be, in relation to how options are priced right now, this could be a very huge move. And clearly on this chart, on this time frame, you guys should be able to see that this is shoulder 1, this is the head formation, and this is the other shoulder that matches time frame wise this shoulder very closely. So it's reasonable to expect that we would close this gap down and potentially even get close to this level. I mean, get close to this 170, 180 level in not so distant future. So guys, you should, full disclosure, we own a shitload of WDAY puts going into the earnings report. But we also have reserves in case we are off on calculations or in case there is some kind of element of surprise and first we move higher. Let's say first we bounce to 240 or 253. We would absolutely be ready to double our positions tomorrow on the bounce. So we own a ton of puts now, but we would be looking, if we don't get an immediate drop, which I think's got the highest probability of happening, we're looking at a move 3 type variation for this stock tomorrow. But if we were to magically get a fucking bounce first, we would be shorting the hell out of this bounce. So guys, anyways, if you're trying to understand what a move 3 is, if you're trying to learn more about chart patterns, if you're trying to understand more about divergences, guys, I mean, it is absolutely insane to look at a chart like this, right? See all this huge volume and understand that something seriously wrong has taken place here, on which a lot of market participants has evacuated the holdings of these stock to the point of beyond recognition. And since then, the stock has not been able to break above this level, which serves now as a major resistance. We just tried to get there ahead of the earnings report. We're unable to do it. So any sort of variation of weak volume trying to close this gap will resolve in a move lower, not higher. So with that said, guys, I mean, look, people's been selling this thing for over a year, and it doesn't happen for no reason. So sometimes, things drop on strong volume, but the size of the drop is not huge. Well, in this case, it was rather substantial from 265 down to 224. It's like a 40-point move. So if we just to repeat that, okay, we could easily go from 232 to, under 200 bucks. But there is a chance that this move could expand this time, and, depending on exact reaction to the earnings report, I mean, we could be looking at a 50-point move here. So, and considering that has a probability of taking place, then where options are priced right now ahead of the earnings report, actually a little bit on the cheap side. So that's why we're taking the trade, guys. That's why we're holding these options. And that's why we're adding to these put options tomorrow. So WDAY, is it going to be a 30-point drop, 40-point drop, 50-point drop? We'll find out shortly after hours. Let's roll.
First, distract target. Then block his blind jab. Counter with cross to left cheek. Discombobulate. Dazed, will attempt wild haymaker. Employ elbow block. And body shot. Block ferrule left. Weaken right jaw. Now fracture. Break cracked ribs. Traumatize solar plexus. Dislocate jaw entirely.